Welcome back to Smart Money. We're talking about some wealth creation secrets. We have with us Charandeep Singh and Varun Daga, the co-founders at Girik Capital. Charandeep, another secret which I think a lot of people know but don't want to admit is that this buy and hold strategy could be a suboptimal strategy, right? It seldom works. I mean, if you look at, say, stocks like HUL, ITC, if you bought them about 10 years ago, you would have barely made any money. But is that the way to look? Is that a blanket way to look at it?
This is a very broad discussion, and I think it's it's something we think about a lot. But what we've learned over time is that, look, if you want to be a buy and hold investor, you should really know what you're getting into and the price at which you're getting into it, right? Sonia, even leaders, like the greatest leaders, sometimes go through 10 years of zero returns. I mean, look at Sun Pharma from 2015 to now, there have been zero returns. Look at Hindustan Lever last decade, or last decade, sorry. Look at Reliance last decade, look at ITC. So there's so many even index stocks that go through this mayhem, right? So what does an investor do? What if they bought Sun Pharma 7 years ago? Why we're trying to highlight this is that for individual investors that are trying to stock pick, it's very hard to actually go out and do it unless you have done proper homework, right? So getting into Sun Pharma in 2015 may not have been a very good idea. Do you have the patience to hold on for 10 to 15 years to see returns? You have to ask yourself that question, right? Where managers like us come in, we have shorter term mandates. We look to make money over a 3 to 5 year period. So we are always trying various tools and tricks to try to maximize returns in the shortest possible time. And I think, that's really the point that we are trying to make, that buy and hold could be a suboptimal strategy. It not necessarily is a suboptimal strategy. It will work over 20 years, but do you have that time and patience?
But in a way, don't you feel that you're sort of contradicting yourself? Earlier, you did say that the problem that some people have is they want to book profits quickly. If a stock doubles, they go and book their profits. Yes. Isn't that a better thing then? I mean, because then if you're buying and holding, you're anyway not making so much money. So if you're seeing profits, you might as well take it off, right?
I mean, you have to balance all these things, Sonia. I think, you're right. There are a lot of contradictions in this. For example, the first point we made was stick to the leaders, right? Yeah. And, here we are saying that, buy and hold and the leaders may not work. So that is also contradictory. But I think the way you balance something like this is, first of all, you have the highest chance of not losing your shirt or not wiping your capital out by being in leaders, right? So if you're building a direct portfolio, you need to be 70 to 80% in leaders, whether it's small, large, or mid. You're not going to get your capital wiped out, right? Even if you don't make money for 10 years, you at least get your money back.
Capital preservation is something that is even a strategy, right? I mean, in those 10 years, you would have perhaps seen a recession, perhaps seen a pandemic. At a time like that, you want to preserve your capital. All right, take your point. Another secret that I want to talk about, and Varun, I want you to come in on this. You said just like the index cuts the losers, so should you. Now, the Nifty has cut out a lot of losers in the past, right? So whether it's Unitech, Suzlon, Yes Bank, Vodafone Idea, but these were stocks that had at one point in time given you great returns. So what do? As soon as they move out of the index, do you sort of move them out of your portfolio? What's the best strategy?
So Sonia, I think, like they say, you have to respect the price. And I think what index does beautifully, keeping the fundamentals on the side, it respects the price so well. I mean, if you go back and just imagine you had all these stocks in the index, you had Yes Bank, you had Unitech, Suzlon, the entire, Reliance Communication, Infra. I mean, a lot of these names, which many of them don't even exist today, were in the index back then. So I think what's very important is that, when they start becoming, and many times, once you've bought in, you start seeing losses in many of them, and they give you enough chance, I think most important is, even if it falls by 20%, 30%, and you've waited on it for 3 years, 4 years, 5 years, I think it's important. Everybody knew that the fundamentals are deteriorating, right? It was, the writing was on the wall, but I think it's our emotions which doesn't let us get out of that stock. Because you bought it at 100, how can I sell it at 50? Yeah. You know that the earnings are wiped out. Many investors say, okay, I bought it at 100, now it's become 20, let me average down more.
Yes.
But I think that's a very, very bad strategy. The index doesn't do it. It actually threw out. So it became a loser even for the index. Suzlon was a loser for the index, after it started falling. But it started throwing it out. So even if you're late, it's okay. At least you're not blocking your capital in a loser, especially once you've recognized it's a loser, And I think that's the difference between holding a great company for a long time versus holding a loser. I think most of the people can open their portfolio and would be able to tell that, oh, I got stuck in this stock or that stock. But I think taking that action of getting out of it, I think that is something what many people can't do. And trust me, if investors are able to get out of their losing positions, it feels so much lighter, and that capital can be used into putting into winners or putting into better quality stocks. So idea is that winners take care of themselves, losers never do. They keeps dragging your portfolio. And the idea is to cut your losers. And even if you are 50% right in your stock selection, and you're just able to manage, if you're able to manage to cut your losers and ride your winners, I think you will make a fortune.
Okay, very wise words. This whole list has come up, and I just want to get that list up back. The Nifty stock exits, right? I mean, it's caused heartburn to so many investors in the past, whether it's Yes Bank, Vodafone Idea, Reliance Capital, and these are all companies that were in the Nifty at one point in time, and now they've all exited. And it is, of course, a lot of people have, as Varun was saying, tried to average at lower levels, etc. But once you identify a loser, you just got to cut your losses. There's no other way out of it. All right, Varun and Charandeep, we've completely run out of time, but it was a really fun chat and a lot of wise words, a lot of lessons as well for long-term investment. So thank you so much for joining us, and wish you both very well. You've had an exceptional journey up until now. I hope and I wish you lots of luck and prosperity. Thanks, guys, for joining in.
Thank you.
Thank you. Thank you so much.
Okay, with that, it is a wrap on another edition of Smart Money. Thanks a lot for watching. Have a great weekend.